Dubai Islamic Bank and First Gulf Bank are the deal underwriters, according to an investor presentation. Etihad Airways, owned by the government of Abu Dhabi, did not immediately respond to a request of about $9 billion in 2015, according to the presentation. At the end of last year it had 121 aircraft and it plans to take delivery of a further 188 by 2026, it added. Etihad Airways Partners, a funding vehicle for the Abu Dhabi-based carrier and airlines in which it has equity stakes, has issued 2 bonds since September 2015, one of which was subsequently increased in size.
Ethiopia's central bank aims to develop Islamic finance to help expand financial access and inclusion, part of wider government efforts to mobilize domestic resources to diversify its economy, a central bank official said. The landlocked country has one of the highest economic growth rates in Africa, but relies heavily on an agricultural sector that employs 3/4 of the workforce and contributes to around 80% of exports. The government wants to industrialize its economy, but this requires sustaining investment rates of almost 40% of GDP over the next 5 years, said Getachew Nana, Vice Governor of the National Bank of Ethiopia. This can only be achieved if the financial sector, particularly the banking industry, can play a significant role in mobilizing desperately needed savings from domestic sources. Islamic finance could help in this endeavor, so the central bank is conducting a study to determine the demand for Sharia-compliant financial products in a country where around a third of the population of 100 million is Muslim. The study would help determine what proportion of Muslims are excluded from the financial sector, Nana said in a speech during an Islamic finance conference in neighboring Djibouti. If this is identified to be a barrier, a specific and enabling regulatory framework will be developed so as no one is excluded from obtaining financial services because of religious reasons. Islamic finance is still new in Ethiopia, despite the government allowing financial institutions to offer such products back in 2008. Currently 8 out of 18 financial institutions offer Sharia-compliant products via Islamic windows, but they have so far mobilized less than 1% of total deposits, Nana said. Sharia-compliant financing facilities that these banks provided to their customers are even very much insignificant.
Qatar Takaful Group continues to develop its business and strengthen its role in Pakistan in order to offer added value to Pakistani insurance sector. Sheikh Ali bin Abdullah Al Thani, chairman of Qatar Takaful Group, in a meeting with Mohammad Nawaz Sharif, the Prime Minister of Pakistan, said the group has managed to expand significantly and open around 45 branches and 1,000 representative offices in various Pakistani cities during the last years. Its total assets amounted to approximately 15 billion rupees and was able to reach the 3rd place in the private insurance market in Pakistan. The Prime Minister of Pakistan welcomed Sheikh Ali bin Abdullah Al Thani at his office in Islamabad. The meeting was attended by Sheikh Mubarak Al Mansouri, Qatar's ambassador to Pakistan, and Abdul Basit Ahmed Al Shaybai, Chief Executive Officer of the Qatar International Islamic Bank. The Prime Minister expressed his satisfaction over improving relations between the business sectors in both countries, Pakistan and Qatar. He pointed out that more efforts need to be exerted to develop many areas, where the private sector in both countries is greatly responsible for strengthening mutual cooperation. He underlined the tremendous facilities being offered by the Pakistani government to investors in general and the Qatari businessmen in particular, and welcomed any activity or initiative that promotes bilateral cooperation in a way that benefits both the sides. Sheikh Ali bin Abdullah expressed his thanks and appreciation to the Prime Minister for his great support and wise directions to strengthen ties and relations between the business sectors of both the countries.
Kenya's plans to develop Islamic finance include a wide-ranging taxation review and the establishment of a national Sharia board, steps which could set it ahead of other African countries aiming to develop the sector. The country wants to build up the industry as part of a long-term plan to turn Nairobi into an international financial center and as a way to help finance infrastructure projects by building commercial links across Africa and the Middle East. The initiatives are being led by the Islamic Finance Project Management Office, a body set up recently to coordinate efforts among Kenya's regulatory agencies. The Project Management Office has submitted an initial set of policy amendments focused on taxation of Sharia-compliant products, said Farooq Raza, Managing Director of IFAAS, an Islamic finance consultancy which designed the Project Management Office's framework. This will be the first precursor to overall industry development by giving legal recognition to Islamic finance transactions, Raza said. The aim is to ensure neutrality of Islamic contracts in areas such as stamp duty and withholding tax, with the proposed amendments to be included in a finance bill to be presented to the Parliament next year, he added. Kenya's decade-old Islamic finance sector includes 2 full-fledged Islamic banks and several Islamic windows, but until now they have operated by way of exemptions, and a lack of clear rules have stunted growth, said Raza. A second batch of policy amendments will be presented by the end of this year, covering banking, insurance, pensions and capital market products including a framework for secure core Islamic bonds. Plans also call for establishing a Sharia governance framework and a national Sharia supervisory board, which could be in place by the first half of next year, said Raza. Islamic banks have traditionally practiced self-regulation in terms of their adherence to religious principles, but a centralized approach is gaining traction to help standardize contracts and address consumer perception concerns. Over the past decade, Sharia compliance has been a challenge for them. Differences in opinions have led to some issues and these have affected take-up, said Raza. The Project Management Office, which has a team of 5 government officials including from the Capital Market Authority and the Central Bank, is also tasked with developing industry awareness and human capital for the industry. Kenya's